The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, midweek trade on Wednesday, we were moderately lower in the grains and oilseeds when everything settled up. It was a fairly quiet day overall, not a lot of fresh news to trade off, and we just kind of drifted, it felt like, as we prepare for the USDA data dump on Friday. There are a few things we are watching. Dollar crept back higher. Cattle futures came under some pressure as well. Wondering what's going on there. We're going to take a look at all of this. Joining us for a market conversation. Good to have him back with us after a few weeks away with the holidays. Mike Zuzolo with Global Commodity Analytics. Mike, happy New Year, my friend. Thanks for joining us on the show.
It's great to be back with you, Jesse. Thanks for having me.
Well, what a week to get you back here, too. As I mentioned, we got a big data dump coming up on Friday from USDA, getting into the first technically full week of trade for the new year, although I know we'll have a slightly shortened session Thursday for the day of mourning for President Jimmy Carter. But, you know, I guess broad picture here to help us start, it's felt very quiet in the grains and oilseeds for the most part here this week. Would you agree, Mike?
Yeah, and in fact, you know, there's a lot going on in the soybeans, and that's going to be most of our show, I suspect. But I was noting just today that since mid-November, the weekly ranges on ever since mid-November in soft red wheat has not been much more than 35 cents each week. That's very odd. It's like you say, it's almost like a calm before the storm feel in this market, and we have the corn market finding a lot of support from the cash and a lot of the recent news in terms of the supply side and the South American drought. But I think as we get ready for the report, the big things that I see, the two contrasting things that I see right now, Jesse, are on the one hand, China's deflation has gotten worse and not better. Their 10-year bond yields, for instance, are at an all-time low. Some of their metrics right now that they measure deflation by are at the worst since 1999. And as this headline shows us from the Financial Times this morning, on Wednesday morning, we saw their currency hit a 16-month low. That after they rolled out fresh stimulus to spur consumption on some tax rebates and some discounts on goods from farm machinery to cell phones. And so you have that one extreme of the market. And then the other extreme you have is the South American weather and the talk in the trade that Argentina could be in a La Nina, in a very serious drought, worsening drought. And I think these two extremes are going to have to pan out probably as we get towards the Friday numbers. And what I'm really focusing on in this drought situation for South America is can we get the dollar to play nice? Can we get the U.S. yield for soybeans to drop? You know, we're still carrying almost a 52 bushel yield from USDA, when in 22-23 we were below 50. A lot of clients I talk to still think that the yields nationally should go below 50 on Friday's report. And so the stakes are very high. Why? In part because Mato Grosso is starting their soy harvest right now. And we know that the January through November soybean imports by China were up almost 9.5% in volume terms. So It seems to me they've bought a lot of beans extra as we get ready for the new Trump administration.
I want to lean in on the South American weather picture here a little bit more, and I pulled up on the video feed a surface soil moisture drought indicator you shared with me from NASA, and you take a look at this and you could see a lot of what is, I think, been talked about by traders, and it's just felt like this dryness concern has been ever so slightly getting to be a bigger story day by day by day. And I'm wondering if it is at the point where it needs to be a major story, or is it still kind of climbing up there in terms of its importance? What do you think, Mike?
Yeah, we're there. I think that's the answer that I would give you is La Pampa is, the major area other than Buenos Aires. La Pampa, Chaco, and Cordoba, Buenos Aires, key areas. But La Pampa's surface soil moisture levels are the lowest in 7 years. And that's where the dark red is. The Buenos Aires province, you can see pretty clearly here. It's also got some issues. Cordoba's looking better. But what I'm hearing from both my colleague in South America and also others is that 2 weeks from now, if it gets 95, 96 degrees in these key growing regions, which it's expected to do as we head into the weekend and early next week after some rain chances come in, if those rain chances are not very good and they're 95, 96, 2 weeks from now without any rain, they will have, in my mind, a 2012 type scenario, Jesse, where there's no turning back and there's irreparable damage. And it's damage enough that we just got an agricultural attaché report coming out this week. I think it was just yesterday on Argentina's soybean production. They kept the number at 52 million, USDA's official number, but they did notice that there are some very large areas that are in drought. They kept the soybeans elevated because of extra acreage planted in soybeans at the expense of corn. That's been verified by my South American colleague. So I would qualify it. 2 weeks from now, we're going to know if there's damage, and 2 weeks from now, we should see the corn and meal be the key leaders to the upside.
All right. I want to lean in a little bit more on soybeans here, just real quick. I know that there's been a lot of folks that have been very bearish in soybeans in general. I think I just saw earlier this week a Rabobank report calling for $9 beans. And we know if that ends up being the case, not a lot of folks are going to be able to make money at planting $9 beans. I mean, just your overall feeling I guess I'll frame it up this way. Could Friday's USDA numbers potentially swing the pendulum a little bit for soybeans and at least get us from being extremely bearish to a little more center potentially? What do you think, Mike?
I think that it very well should, and it better, I guess, is how I would qualify it, Jesse. And that I say that because the currency's also been working against us very aggressively, with the Brazilian currency hitting record lows this last 30 to 60 days. I'm starting to see a potential sell signal in the dollar against the Brazilian real. And so if I could get a decent report, i.e. a yield reduction in the U.S. soybean crop from this past year, and we don't hurt demand, the export number doesn't get hurt, and in fact, we maybe add to it a little bit because of the demand that China has shown us this last 30 to 45 days, I think this is the time that we need to see the beans perform, and the meal needs to be the leadership, especially with Argentine weather at the forefront. Otherwise, we're only going to get more new crop supplies come on as we get into February and March from South America, and we still don't know what's going to happen with the tariff policies. And just today, before the market closed, and I think this is why the trade weakened up a little bit more, and we pressed new daily lows in the wheat market. President Trump is rumored to have been talking about doing an economic emergency notification when he takes office, so that he can push these tariffs through essentially immediately. Look, we don't want to get trapped in that, and we've got to remember what you and I have talked about a lot. China is our commodity demand base, and if it's in deflation, and it's like Japan in the 1990s, we can't rely upon that for extra demand. And so that 1040, 940, 840, those flat lines that you and I have talked about and looked at a lot on those long-term charts, those are real numbers. Those are real price objectives if we lose that 940 level for me. So yes, this next 15 days needs to be an upward move. And if it is, I'll hedge into it.
And that's an interesting point you bring up with the tariff talk and that news from President-elect Trump here. Just to lean in on that real quick a little more, it's been kind of a mixed message. Early in the week, there was talk we could ease it. And then the Trump administration saying, no, we didn't say that. Now this news, maybe a further escalation. I think that just overall, it points to a lot of uncertainty for the markets here in the near term.
Excellent point. And we see that the dollar is primed to perform one way or the other. When it lost 1,000 points on that Washington Post report that President Trump was going to ease back on Chinese tariffs, that told us, look, this dollar's for real. It could go up another leg. It could put a high in depending on how these tariffs go. So I think this is where you start with the low-hanging fruit of the soybeans. It's got the weakest demand. It's got the best supply potential. and it's got the most uncertainty to it as far as downside potential as we get towards the March, April, May timeframe. We don't want to get trapped not selling both corn and beans if indeed what you're talking about happens and what I'm fearful happens and we lose another dollar in the soybeans. One last thing I'll throw out here that very few people understand, and I got to give my credit to my South American colleague for pointing this out. He had an Argentine expert, grain expert, on his show last week, and he called me and he said, take a look at this. And the Argentine grain export said the Argentine government is very prepared to lower export taxes on their grains and oil seeds if they have a crop. And so if they don't have a crop, we don't have to worry about it. But this is yet another angle, another part of the puzzle. And it's like a multifaceted diamond. It's like, we don't know where it's going to come from. But most of the issues that we have to deal with are probably more price negative. And so Argentina throws out a cut on export taxes. That's almost the same thing as an increase in import tariffs from China and their reaction. So we have to keep that in mind.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Mike, let's talk corn and cattle here for the bulk of our remaining time today. And first, I'll pull up a chart. This is looking at the SRW wheat corn monthly spread. You mentioned earlier corn has been finding some support here as of late, especially kind of this 460 futures range. It feels like we've been finding support. Walk us through your feelings in this corn market and maybe what some of these spreads, particularly this wheat corn spread, is telling you right now.
Yeah, this is where we're already starting to hear from places like Indonesia and other Asian countries, South Asian countries, that are feeding a lot of livestock, especially poultry, moving towards feeding wheat instead of corn. And this is what happens. This is why wheat is our leader from a variety of areas. We've gotten to 80 cents premium to soft red wheat. That's followed through in the cash market for the most part, so that it's cheaper to go after feed wheat than it is corn at this stage. So I'm like many others right now, Jesse, that feel like that the corn is going to have difficulty continuing higher without the help of either wheat or soy meal. It's done a lot on its own. We're probably going to see a little bit more farmer selling pickup after this report, especially if it's a friendly report. And we've got to keep that in mind as well, that the cash market may be indeed at kind of a topping pattern for right now. And it's the futures market that maybe will do most of the heavy lifting as far as upside if we have an Argentina drought that continues like a 2012 scenario like we had here. So this week corn spread just speaks to me and says, look, we need help in the corn market to go higher and break through that long-term resistance level that's on the monthly chart.
Looking at that monthly chart, since you mentioned it, let's go there. And, it looks to me, and again, I'm no chart expert, but I can take a look at something and see that pretty defined trend line here on the monthly corn continuation chart that we're kind of just bumping up against right now, it appears. What are you seeing here?
Yeah, we're on a roughly 6-month trade back up to the upside, and we've hit some really key resistance. That purple resistance line comes off the 2022 high, as well as the 23 high and the late 24 high. And so now we're looking at the backbone of the bear market, and we're really trying to eat into it and take it out. The other noteworthy part here is the retracement level up to about 100% would be around 473, 475 area. That would get you back to the highs from the springtime, early summer of last year. So if you take 475 out, you would not only take out some key flat resistance levels, but you also take out that backbone downtrending resistance line. So that's a tall order. So you can kind of see visually what we're talking about, how that seems to be a tough bill to fill unless you've got some help from some other markets.
All right. I want to go over to cattle before I pull up a couple charts for us to look at there. I do want to ask, it felt like to me that feeders and live cattle found pressure on Wednesday, and I'm wondering, we have some sources that are saying that the Mexican border is going to reopen the week of January 20th to the cattle imports after the New World screwworm issue. Do you think that was maybe a big catalyst to Wednesday's action specifically, Mike?
Yeah, I think there's three things driving this cattle market. And now that we've got the cash behind us and the winter weather behind us, which propelled us up very sharply and almost a parabolic straight up move. And so it wasn't going to take a lot to knock the wall over or knock Humpty Dumpty off that wall in the short term. But I think that screwworm issue is a piece of the puzzle. I think the President Trump news on the economic emergency and the tariffs targeting Mexico specifically, I think the trade got worried about that. And I think we've got a very nervous, wobbly stock market right now. And the funds are still very, very net long in the cattle and in the hogs for that matter, too, Jesse. And so I think this is an issue that, as we've talked about, is going to be an issue with us for 2025. It's very hard right now economically. If I had a rancher come up to me and say, why are you so nervous about consumption and demand when we have such tight supply? And it really goes back to the economic data does not make sense right now. It's not clear that we are strong economically. And what I mean by that is we have very strong jobs figures, but I also saw that in 2024, bankruptcies in the United States hit a new 14-year high. And these were not small companies. And so I'm getting a lot of high intelligence or high frequency data that would suggest you've got consumption issues at the macro level, but then you look at the retail side of the equation with the beef prices and the beef retail demand that USDA keeps track of, and it's still very much on fire, and it's still very, very strong in the beef sector. And so this is what's going to be really difficult in the cattle market as we get ready to build back the herd. But that's, I think, the short term, the answer is correction, and then maybe try and go up another leg.
You mentioned a couple things there. Cash cattle trade has just been so strong out in the countryside. This chart looks at cash versus CME live cattle futures, and walk us through this. But you can pretty clearly see a pretty darn close correlation here as of late.
Yeah, this has been a very healthy, very a robust market in that you don't have to look at a lot of different things. As long as the cash stayed strong in both feeders and fats, the market came back. Well, now we're past the seasonal strength of the cattle market, and so we could get more winter weather, which would delay more marketings, which would back up the supply more, which would probably take us up to another leg up. There's several things that could happen, but there's also that issue of the demand side. And so if the cash, which backed off yesterday at this time, if you looked at this chart, that white number on the left was $200 even. We've backed off to 197.50 as of the middle part of the day on Wednesday. So that means the packers are pulling back a little bit here and not wanting to chase it. And I think the fat cattle reacted to that as well. So the technicals have been very accurate here with the cash market, and that's why I like relying upon them.
And you mentioned too some of the stock market economic correlations, and I like when you share this chart with us. It's a S&P 500 live cattle 4-week correlation chart. Looking at lead month futures, and just to reiterate some of your points here, what are you kind of seeing with this correlation right now, Mike?
Yeah, it's interesting to note. I usually show you an 8-week correlation, and that's been running up in the 70s and 80s, but it dropped into the negative numbers. And so the correlation on an 8-week basis broke apart, Jesse. What we're starting to see, though, is this correlation rebuild on the shorter dated correlation studies like the 4-week. So if this 4-week turns into a 5-week, turns into a 6, 7, 8-week, all of a sudden we're back to having a very sensitive cattle market to the stock market as bond yields continue to go higher. Bond yields equal higher inflation. Higher inflation means the Federal Reserve is trapped. Higher inflation and a trapped Fed suggests the stock market's going to have real difficulty maintaining these recent gains that it's had, if not lose some significant percentages potentially in the first quarter. So I want to be aware of that and want my clients and subscribers to know that too.
All right. Great stuff as always, Mike. One thing I want to throw at you, we didn't talk about this before the show, but I just thought this was interesting. And we like to talk about wheat a lot. CME Group saying on Wednesday they're going to launch physically delivered hard red spring wheat futures and options on the Chicago Board of Trade early this year. Maybe a bit of a challenge to the longtime existing Minneapolis exchange. I don't know if that's something that's going to have a market impact or if it's just an amusing nugget of note. What do you think, Mike?
I'm glad you brought that up because I see a big pattern of consolidation going on with the data. I was just informed at the beginning of this week that I can no longer get the cattle index, the CME cattle index, or the CME hog index through my LSEG Reuters platform. The CME is pulling that back. and they're working that now through their data mine, as they call it. And it's a pay per view data mine. It's no longer free as far as the access to those major indices that the funds use and that we look at, especially upon expiration, to see where the premium is in the cash or the futures. So I'm juggling and spending more money now to be able to keep up with the cash versus futures. And this is all a big part of a consolidation, and the big guys getting bigger and the smaller guys getting out, unfortunately. So data is going to get more and more expensive as we go forward, Jesse.
Interesting note. Okay. All right. Good to know. That's something I think we need to watch a little closer here as we move forward. Mike, if folks want to reach out to you, have a conversation there at Global Commodity Analytics, I know a lot of ways to get in touch. What's the best way to reach you?
Globalcomresearch.com is the best way. Toll free 866-471-2588. Sign up for a trial and let's talk.
And of course, the risk of trading futures and options can be substantial. Globalcomresearch.com. Mike Zuzolo, Global Commodity Analytics. Good to chat with you, my friend. Thanks so much. Have a great week. We'll talk to you next week.
Thanks, Jesse. You too.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.